Good evening, traders. I just want to do a real quick update, just to follow up from my last two videos, just to kind of show how price has ran the 60-day high as expected and moved back into our daily monthly premium. So I suggest you watch my first two videos if you haven't already, and it'll just make more sense when watching this video. So just start with the monthly. Our whole bias was the fact that the monthly had moved down into this inefficiency here, and we were expecting it. I think at the time I did my analysis, we were on this candle, so we're expecting it to move back up into the 60-day high and the inefficiency in the last down range, which was here. And I'll just quickly draw that on. And you can see that we've actually currently, as I speak, we've filled this gap completely. So we've fulfilled the monthly narrative that I was expecting. Obviously now we'll wait for more data, but yeah, everything kind of went according to plan on the higher time frames. I'm just going to get rid of these so it's nice and tidy. This is obviously our most recent range. We had this high was taken here and these lows were taken here. So this is the bearish dealing range. This range can obviously extend, but for now this is the current dealing range, and because it's the monthly, we don't need to worry about these other ranges like this one or this one, because this is a lot of time. You know, you're waiting a long time, often years, for these ranges to play out. So we just look at the most recent range, which is this one, and this is all the only one that we're really interested in. So if you drop to the weekly, this gives us a little bit of an X-ray view on the monthly chart. So this is our monthly range here, but now we're on the weekly, we can fine-tune the range, which I did here. So this candle high, you can see that it took the high of this candle, and then obviously there was the lows taken here. So this was our dealing range. So inside of this dealing range we had the 60-day high, so we had the 20-day highs, 20 and 40 days highs, which were these, but we had the 60-day high, which was ultimately our target, because it was the last high that was untapped. So it was untapped liquidity, and we're expecting price to move up into there. Above that high we had this weekly fair value gap. Now this is a big move, so I was initially unexpecting these highs to be taken, but we had some good price action today and yesterday, which supported higher prices. So we actually did break into this weekly fair value gap. Now, just to give you an idea of what I'm possibly looking for next, I'll be now just waiting. We've got NFP this week. So if we break and close above this weekly fair value gap, on the lower time frames, I'll possibly be looking for this to now act as support to move up to either the rejection block, which is the top of the candle open, or the candle high. But at the moment we're just seeing if we get a reaction from this and for a move down. If we do get a reaction, my next DOLs will be at the 20, 40 and 60-day lows, which I'll go into next week once we've seen what price wants to do with this fair value gap. But for now, this is what we got. So when we did the analysis, I think we were just on this week, or this week was closing. So the 2 weeks that we had after this week were bearish candles, and obviously we were expecting price to move up. So we were expecting open, low, high, close, open, low, high, close up to this. But as you can see, we've got two bearish candles. Now I won't do it in this video, but if you go to the 1 hour and look at this week, you'll actually see that we had a bullish profile. This low was actually the Wednesday low. So even though the candle closed bearish, the session trades, there was some good long session trade buys, because we had this Wednesday low and then price moved back up. So there was, inside of this wick, there was some good longs. The following week, again, we closed bearish, but as you can see, this high took the previous 2 weeks high. So there was some good longs in this. This was a tricky week, but there was, we went in with a bullish bias, which actually, if I show you on the daily, I'll show you the reason why we could have been bearish this week, or we would have. I was predominantly bearish this week, and I'll show you why. But just for the purposes of this video and kind of keeping it simple, you can see that we did break the high, so we could have had longs here. And then obviously we've had longs here. This candle's just kind of like shot up and gone on. You know, this is a really strong candle, and what you'll actually find is this high, this 60-day high, this was the last day for it to break this high. I was having doubts that it'd actually do it, because we had like a day to break this 60-day high, and price, you know, didn't disappoint. It just clearly didn't waste no time and broke this high just in time. I mean, if we go to our daily, and if I just put on my look back indicator, this line here, this represents our 60-day, and you can see that the line here, and if I remove this, you can see that this was the last, today was the last time this was going to be a 60-day high, and we ran it. So that's how important the 20, 40 and 60-day highs are, highs and lows. Again, not going to go talking to like entries and all that yet in this video, but I'll just give you a rough idea of the past 2 weeks. This week here, which was last week, you can see that even though we're expecting bullish prices, it actually came down. No, this wasn't totally unexpected, because this range here, so we've had lows broken, highs broken, so this is a dealing range, and then inside this down, this set of down candles, we had this fair value gap here. So we moved this across. This was at 50% of this range, so this was our inefficiency. We also had daily order block here, which is this set of down close candles. So this inefficiency with this set of down close candles, this kind of like, you know, lines up, you know, lines up 50%, daily order block, below a low, inefficiency, fair value gap. So we were expecting price to come down before then coming up. So on the lower time frames, there have been some nice shorts to underneath this level and into this order block and into this inefficiency. But again, I'm not going to go into this video. It's just to show you how even when we get to the lower time frames, you know, these dealer ranges really do kind of matter, and you know, it's exactly how the market moves. This larger dealing range here, you can see that we've come up to these inefficiencies. We're now currently at this up candle here, so this is a strong area. This is a balanced price range because we've had down, up, down. So we'll see what price does here. Currently I'm sitting on my hands until NFP. I want to see what NFP does this week. But that's it. I just wanted to show you how we ended up and how price did pretty much what we expected it to do, and how important the 20, 40, 60 look back is when trading the euro. And that's it. So hope you enjoyed this video, and I will see you in the next one.